Hello, my YouTube friends. Happy Monday. I hope everybody's doing well. I hope everybody's crushing it as the stock market continues to push towards new highs. Um, I'll do an update on Jacob's account. I'll talk a little bit about AMD, which is blowing my mind, and some of the stocks in my portfolio. So stick around, should be a great video. So after doing the video on Saturday, Jacob and I had a follow-up conversation after I turned the camera off because I didn't want to get too into it on the camera, although maybe you guys would have found it interesting, where I wanted to talk to him about not getting too aggressive on selling puts. And one of the things I've talked about in other videos is how important position sizing is and not getting too aggressive, essentially. So his Soundhound position, originally he had 200 shares. We were buying the stock around $14 a share, if I remember correctly. And then last week, he ended up getting taken on an option he had sold. He had sold a 17.5 call. The stock closed above 17.5, so he sold 100 shares. In the video, he talked about selling a put at 17.5 and another put at 17. After the video, when we had the conversation on the video about no problem, it's his account, he could do whatever he wanted, he can. But the follow-up conversation was along the lines of a stock that moves up that quickly has a potential to fall that quickly as well. Now, Soundhound is up further again today, so maybe it was a mistake and I should have just let him do whatever he wanted. But here's the problem that I foresee and what I try to counter against and try to be cautious against. If a stock's run up that much, I don't want to chase it higher selling puts. Because if it corrects back into the range that it was trading, and let's say Soundhound does something reasonable and just goes back to $14 or potentially $13 a share. If he sells the 17.5 put because he got taken on the 17.5 call, as well as a 17 put, he's now buying 200 shares where he only sold 100 on a stock that's just going right back into the range, and now he's changing his purchase price to significantly higher. So what we talked about is he can be totally as aggressive as he wants and sell the 17.5 put, but maybe that's about it, and let the stock do whatever it does. And don't sell a call on top of it, because if you happen to be lucky and just own a stock that's going parabolic, you don't want to kick yourself if the thing just takes off and keeps going. So all we ended up doing on Soundhound was selling a 17.5 put today when the market opened. I did not sell a 17 put as well because I didn't want him getting stuck, ending up owning too many shares if it had a correction. Now, the other part of the discussion is if it falls back into the range, you can then start selling puts, especially because the premium will be better. If a stock is falling, generally the traders are erring towards the side of the puts being more expensive, because as it falls, people get nervous, they sell the stock, they sell calls, they buy puts, and that pushes the values of the puts higher than they would be if the stock is going higher. So it really helps the trade. Now, maybe it doesn't do that. As always, this is not financial advice. Nobody has a way of predicting the future. As I joked with a friend, it is much easier to predict the past than predict the future. Please do your own research, reach out to a financial advisor, and don't be listening to me when making financial decisions. I just post this stuff for entertainment purposes and because I enjoy doing it, and you shouldn't be making any decisions off of it. It's also, I know I've mentioned in other videos, I want to thank you guys for allowing me the opportunity to do this stuff because it helps me be more disciplined about my trades, which is super cool. I've really enjoyed the option strategies on it because it makes me be more patient as well. I let the things expire. Either I get assigned shares or I have shares taken away, and then I deal with it from there going forward. Saturdays are getting a little bit more fun because this weekend I think I had something like 32 options expire. Now, I got taken on a couple of calls. I got 100 shares of one thing assigned to me, but other than that, it was just money that went into the account from options that I had sold. I also sold one open door put for him at 8, which he wanted to do. He actually wanted to do 2 of those, but the market sold so quickly, or moved so quickly, not sold so quickly. The market went up so quickly, actually, that I had only gotten one of the puts off, and the market changed, and I figured, well, it is what it is. And then he sold a put and a call in LAC, which was a position I think I told you guys that I put on for him because I like the concept of if the government is taking a 5% equity stake in it, that's probably an overall good thing and you could see it really run. I guess we'll see. I really have no good insight onto LAC. I think they were probably a pretty lousy company. My bet is just betting on the administration making things work. And how about AMD up over 25% on the open today because of the agreement they went into OpenAI. I don't know if they're teaming up because they see what's going on with nvidia and Intel and some of the others, or if this was a legitimate thing that they'd been talking about for a long time. I don't know if the move in AMD is overdone or totally justified. I haven't dug into it yet, but it's really amazing seeing a stock move that much, which is where I see like reminders of what went on in the late 1990s before we had the correction in 2000. But as I've said in other videos, I still think we are early on in that cycle. We are definitely having signs of bubble. We have not gotten the part where it's just buying things on hope. And that's kind of what I'm looking for. Do we get to the point where new AI companies are opening up that are just shooting up, that have no earnings and just a great story and potential in the future, where people are coming in from outside of the traditional realm of who buys and sells stocks, and you start getting into places where you go to dinner and maybe the waitress or the waiter or whomever that you wouldn't think of as somebody in the stock market is talking about their new AI company that they invested in that went through the roof. No different than when crypto did it, when, Shibu Inu was around and some of the others. I even forget the names of the ones that were going crazy. But that's the type of mania I look for in terms of actually getting out of my long term trades. Outside of that, maybe the markets are overpriced or underpriced, but I really don't worry about it too much. And it's just noise right now. I don't disagree that the pricing might be a little inflated and there's a potential for a pullback, but I don't see a huge collapse for any reason because a little overinflated just means we could correct to get to where we get a little oversold and then we'll balance in the middle. If we get to where it goes hyperbolic and people go crazy and you have that mania going on, that's the type of thing where I start to worry about a real correction and consider even covering some long term things. Outside of that, I watch it. I enjoy that we're making new highs. The only way to go higher is to continue making new highs so they don't make me nervous or feel any reason to sell. I just think the economy is doing better than what people think. And with the Fed cutting rates, it's going to push people out of fixed income type of products into things in the stock market, which is why I like the dividend companies. If you can get a 5% yield on something like Target that has earnings to be able to make those payments, that's going to look a lot more attractive if you see treasuries start to come down in yield and not pay as much. I'm also interested to see if mortgage rates don't spike higher after they start cutting and maybe they start to come down, making a good base for the real estate market that doesn't cause the crash that people are talking about. I don't disagree with people that I think prices are expensive and rates were high, but the economy is actually catching itself and having a soft landing. The only thing that the Fed or anybody else is really worried about is that unemployment is kind of wonky. You see a situation where people are still letting people go, and there aren't a whole lot of new jobs being created, which is creating a really tough environment for those who are unemployed. At the same time, you do still have a gig economy, and there are people being able to go out and drive for Uber and Lyft and things of that nature to be able to supplement their income and actually have a job despite looking like it's unemployment. And me personally, I still see opportunity out there where I see things that look undervalued despite the overall economy or the overall market looking overvalued. I think healthcare still looks relatively inexpensive. To me, Bristol Myers is super attractive, trading around $45 a share. I actually bought a little bit. And the other one that I talked about recently that I added on to is PayPal. I think PayPal is finally breaking out of that base that it's made over the past few years. And what they say is the longer a company makes a base, if it starts to get out of that and starts to go higher, the further it can go on the up move. I think PayPal could have a really good run. I don't know how to explain it. Their earnings are good. Their price to earnings ratio is just fine, as opposed to something like Costco, that is one of my favorite companies. But saying that it becomes a buy when the PE gets below 50 is still so asinine to me. I'm a buyer at Costco when it gets probably below $600 a share. I said something to my buddy Steve about that, who looked at me and started laughing. I mean, literally, he started laughing and he's like, "You're out of your mind. It's not getting that low." Maybe he's right, but then I just won't be an owner. I will be jealous of those who are, especially if it continues to go higher. But paying 50 times earnings for a stock that's growing at 8% seems so ridiculous to me. That's when I do pay attention to valuations and start trying to buy things that I think are undervalued. Now, don't get me wrong, it can just run and run and run and continue to be overpriced, which is why I say if it never gets to my levels, that's no issue. Like, maybe it's just something I don't own. It is one of my favorite companies. I would like to own it, but I am not going to pay any price to just own something because it's one of my favorite companies. I do try to pay attention where I'm just not paying anything. Now, if you don't watch the markets and you don't like this stuff, there are opportunities for that as well. I think VOO, QQQM, I think these are all great ways to not have to pay attention. But if you do pay attention to valuation as well, and buy the companies. I think Peter Lynch is right. Like, buy what you know and where you shop, because you're going to understand if they run a good business, right? I mean, wherever you go, you walk in, you know if they're a bunch of idiots and it doesn't do a good job and you just think they suck, or you walk in and you think, wow, this is such a great company. They're always busy and their customer service is great. And have an ability to stick with the ones that you think run a great business. But then take a look to see if their earnings are good, if they're growing, if they're in a good position, or just ignore it and start with a really small position. The guy who was laughing at me, my buddy Steve, I kind of said to him, because he bought a little bit of Costco and now he's really frustrated because it's been going lower. I'm like, look, if you bought a really small amount for what you're comfortable with, you wouldn't be stressed that it's been going lower. It would give you an opportunity to add on. And if you're really patient about it, you can wait until it moves $50 before you make a decision to add more. And if you never add more, great. It means your first purchase was a great purchase and you'll just make money on it. So be really careful with position sizing. It was kind of what I was talking with Jacob about, and being over aggressive. If you want to know the trades I made today, I actually sold a couple of puts in SoFi now that it had a pullback after I had gotten out of the stock. I sold a couple puts in Bristol Myers and bought some Bristol Myers. And then PayPal, I sold a couple calls as it's rallied, because I had a nice position in it already and I'm looking to shave it down to what would be an appropriate position. I don't think I did too much else. I have a whole bunch on, Conagra obviously, and some others, but the market's been behaving what I would call perfectly. I love that the news makes people scared and they keep people out of the market. I love that the VIX is a little inflated, so it keeps that not overbought like total greed index. And I like that the rhetoric on TV is that we have a crash coming, keeping the cash on the sideline so that there's more money to go in when people finally give up and the market's really just going up. And that's what I would look for. Anyway, as always, if you could do me a favor, if you haven't already, hit that subscribe button, smash that like button, make some comments in the comment section. Let me know what you guys are buying. I really appreciate those of you who made comments about the things that you've been trading options on as well. I'm looking into some of them because, like I said, these low volatility stocks with really small bids and all, like, you don't get a lot of money for the options, but when you do the math over the year, man, the return is really good. For example, the Bristol Myers one I sold a 44 put for, I think, October 24th. You'd have to take a look to see if it's right. And I got 73 cents for it or something. It's against me. But what I explained to my buddy is when I multiply that 73 cents out and divide that by how many weeks it's been versus a year's worth of weeks. So I take 52 weeks. If it's 3 weeks out, divide that by three. I think that's what it was. I get 17 and change. So I multiply the 17 and change times the 74 cents or whatever I got, and then divide that into the stock price. I'm getting like a 28% yield in that put that I sold. And if I have to buy 100 shares of Bristol Myers at $44 a share, great. I got no issue with that. Maybe I sell another put. I keep the position sizing small so that if I have to make a transition down the line, it's okay. And I pick stocks that I don't mind owning. And if I get assigned, I will reverse and sell the call. Anyway, obviously, they started making noise again. I'm going to get going. Have a great Monday. Have a great rest of the week, and I'll talk to you guys soon.